simple tip turned my trading from break even to profitable. It's my journal system, and in the next minute I'm going to show you exactly how I use it to catch setups I used to miss out on. Here's what I do. After I take every single trade, win or loss, I put in my entry log. Do I win? Do I lose? My P&L, the amount I risked, what were my key levels? Then I go through and see what did I miss. In this scenario, the first thing I can see is that I was trying to short when a high time frame fair value gap was clearly present, assuming that the market was not going to manipulate higher. Through that process of writing down your emotions, your process, and what you did right and wrong, you should be able to come up with a clear rule set to help you take banger trades like this. Once I started journaling was the instant I got my first payout about 2.5 years ago, and I haven't stopped it since because why stop what's working? Journaling and having a proper rule set has kept me profitable with prop firms for years. It only takes about 15 minutes out of my day, and it's gotten me funded over 5 million with prop firms. It's called Market Maker Model, and it's so stupid simple, I can explain the entire entry model in the next 45 seconds. Within Market Maker Models, you will have a sell side curve and a buy side. First, wait for the curve to switch from sell side to buy side, which is a reversal. You'll see a reversal at a high time frame PDRA or when you see an SMT with a previous session low. Here, NQ did not sweep the Asia lows, while ES did sweep the Asia lows. To see price start to reverse, you mark out your fair value gaps on the 1 minute, and all you do is wait for price to tap into one of those fair value gaps. As you can see, we rebalance into the lower one. Then you enter when price starts pushing back up, which in this case, we have an entry confirmation of a CISD. Now that you're in the buy side curve, all you have to do is target the top of the sell side curve. As you can see, this plays out really quickly and smoothly. I would rank this an A setup, which means I'm taking it almost every single time I see it. Up until today, this week we've only had poor ranked setups, which means B- and lower, meaning I didn't take anything and actually saved myself from about 4 losses. The biggest reason I'm funded over 4 million with prop firms is because I have the correct stop loss placement. In the next minute, I'm going to show you exactly how you can increase your win rate by using proper stop loss placement. So before you determine stop loss placement, you need to figure out a perfect entry model. I trade the 4-hour PO3. This entry model is different from others because it has a very unique stop loss placement. Essentially, every time a new 4-hour candle opens, it is bullish, it will make its bottom wick before continuing higher. Now on the 1 to the 5 minute, that's going to be a PO3, which is accumulation, manipulation to put in that bottom wick, and then distribution. You're usually finding our entry somewhere around here. Now once we've actually begun that push up, it's pretty safe to say the bottom of the candle has been put in. Now our trade would be invalidated if the 4-hour went down and made a new low. So we start accumulating right as this new 4-hour candle opens, and we can see our manipulation right here putting in the bottom wick of the 4-hour. Then our entry confirmation is this inversion fair value gap. Now a lot of people would just go long with their stop below this gap that got inversed, but I know the movement of the 4-hour is still valid unless it breaks this low here. So that's exactly where I'm going to put my stop. I'm targeting a 1.5 risk to reward on this trade. 240 ticks on this trade because of this one thing called a daily profile. Daily profile will tell you the market direction almost every single day, and it's the main reason I'm funded over 5 million with prop firms. So I'm going to show you how to do it in the next minute. First, mark out your sessions. We have Asia from 00 to 6. We have the London session from 7 to 13. And after we have the New York session. Mark out Asia's range, Asia's high, and the low. If the previous day is bullish and London sweeps and sees a reaction off of it, that likely means the New York session is going to open and continue off of that London reversal in the same direction. To put it into simple terms, it's just a daily PO3, which is Asia accumulates, London manipulates, and New York will distribute. Then all I did was trade the 4-hour PO3. We had an SMT with this data low and then an inversion fair value gap. So that's exactly where I entered my longs today. And all I did was trade the upwards New York distribution. Now there's multiple daily profiles. It's one of the main reasons why my bias win rate is over 90%. This key level right here to catch my biggest trade I've ever taken. We collected over 5,000 ticks on this trade in 1,200 points. Here's the proof and timestamp right here that I took in the Discord. In the next minute, I'm going to walk you through exactly why this key level resulted in such a heavy move like this and how you can use it to turn profitable yourself. Starting the day off, pretty much everyone was actually bullish on this market, and I was too up until a point. This wick right here that we put in from the fake tariff news yesterday created a high resistance point of liquidity. Combined with that, we also formed a daily fair value gap. So at 10 a.m. this new 4-hour candle opens. We're looking for a 10 a.m. PO3, which is going to be accumulation, manipulation, and distribution. What's key here is what happens with our manipulation leg. You can see as NASDAQ inches closer, it actually doesn't take out this level, but on ES we actually did sweep out that high, tapping into the daily fair value gap and having an SMT at that very high resistance point of liquidity. After getting that very high resistance manipulation, I saw the most recent recent bullish fair value gap become inversed. After that inversion, I just flipped to the 1 minute time frame and waited for a bearish gap to get respected. This one candle change in state is exactly where I entered my position, letting my stop breathe actually pretty wide here. This PO3 trade, I targeted the market maker buy model lows, so here, here, and here. And I left some small runners to run all day, which eventually hit that 5,000 ticks. Let's watch this play out. Utilizing the PO3 to hit trades like this isn't going to happen every single setup. I was willing to take this because I ranked it an A+ setup. It became simple when I realized this one thing. If daily bias was so crucial, then how did I already make $7,000 this month alone without even using it? All I use is one strategy that has 2 time frames and happens at the same exact time every single day. First, you find the direction price is going, which is clearly bearish here. Then you find a data wick, which is an abnormally large wick found when news has come out. If it's within a few hundred points of price, that's going to be your draw on liquidity and your target. Then I trade my strategy, which is watching price accumulate or move sideways on the 1 minute time frame. Then when a new 4-hour candle opens, we will manipulate higher to put in a top wick of this candle. And once you see a change in the state of delivery back down, that's where you short to your draw on liquidity. As you can see, it plays out very smoothly and runs straight to its target. This is called the 4-hour power of 3, and I would rank this one an A+ setup, which means it has a very high probability of playing out to my long targets.